Hello and welcome to Vox Markets. It's the Bulletin Board Heroes on Tuesday, the 19th of July. What will probably turn out to be the hottest day ever, or at least since 1540, but that's a different video perhaps. Starting off with the FTSE 100, where we've made good on that trendline break that we had, the June trendline break, around 71.70. Above that, looking for the 200-day moving average, still rising there at 73.50 over the next week or two. Obviously, the big break there would be if we could get through 73.50 and then on to June resistance over 7600, which still feels as though it's a long way away. The break to the upside flagged slightly by the more positive RSI trend that we had last week or earlier this week. And just want to see the RSI just tick properly up over the 50 level. We're just above there now, but into the low 50s or mid 50s would be an even better look for the UK index. We managed to, so far, avoid plunging below the 2-year uptrend line there on the daily chart, one that's been in place since the pandemic low. Above that, the overall picture is that we're still in this rising trend channel, which could head towards 8,000, which seems like pie in the sky, but I suppose stranger things have happened with the UK market. Moving along to Bitcoin, and here the situation is that we were tentatively looking for a positive break for this market, but so far slightly disappointing. Backed off at the 50-day moving average, or haven't quite got through that. That's around 23,000. So still really in that 19,000 to 22,000 range. And we want to see now, I suppose, a clear break of the 50-day line on a weekly close basis. Haven't been able to stay above the 50-day line since mid-April. We did break that the top of that March resistance line, the March trend channel rather, around 21,700. But looks like the 50-day line may be more important than that. Especially as it's maybe a more rigorous bit of charting furniture than just drawing a line from or through the recent highs. RSI above 50, so that's positive. That's at 54, so that still gives a bit of wiggle room there for the bulls to get their act together maybe tomorrow or later in the week. And the recent support, I suppose, is more towards the 19,500 area or 20,000 area. So at least while we're above that, we've got the chance of building higher. If we do build higher, the obvious destination would be the old May low there, just above 25,000. Moving along to the stocks, and ironically, this is not a hero. It probably is one of the villains of the piece at the moment. Looking at Audioboom. Just the stock that keeps on declining. We did have, to start this month, a dead cross between the 50 and 200-day moving averages. That is obviously a sell signal, so that's sort of a continuation signal. We broke through back below the what was looked at as though it could have been very helpful support there around 780 from that double bottom back in August, September. So I think 780 the level there. Below 780, risk of obviously further downside. The only fig leaf of hope and support at the moment, it really is an uptrend line there from back in November, December 2020. So notionally we're right on that now at 730. So if you're a believer in the Audioboom fundamentals, maybe you might decide that this is the place to take the plunge. Otherwise, the next area down really back around the 560 area, which is spring 2021 support. So really need to hold this 730 area. We did need to hold the 780 area in many other areas as well, but that's the lay of the land. If you want a slightly different signal on a reversal, then you could look to the RSI window where there's been a downtrend line there from May. That's running around the 34 out of 100 level, and so an end of day close above that might be a leading indicator on a potential turn. As you can see, we've basically been below that line over the last month, so that could be an early bird signal for those who don't want to try and catch a falling knife. Happier story here at Bezant, where after lots of toing and froing, we bounced off the floor of that broadening October triangle. That's been in place obviously since the autumn, with 3 or 4 different bounces off it. And the positive here is that the latest bounce, which came off lower lows below 0.1p, was met with the same RSI that we had back in May, so that's a bullish divergence. The ideal scenario here is that we remain above 0.1 and head back towards 0.2 pence over the next 1 to 2 months, even though that feels as though it's a long way away. Minimum on the upside, maybe up towards the 200-day moving average at 0.15. Moving along to a decent stock in terms of its recovery prospects. We've got a long uptrend line there and a long bullish divergence line there from CapEx. The longer the line, the more reliable the moves can be, and we've broken out of that falling wedge also from March. So basically at the moment above 4p, looking for at least the top of that descending triangle from descending channel rather, from December as high as 5 pence, maybe push up to 6 pence over the course or by the end of next month if the bullish divergence kicks in properly. But the key here really to stay above neckline resistance at 4 pence. Stock which is totally new to me, which is very rare because I know almost every single epic code on the London stock market. Some of them I wish I didn't, but here we've got clean power hydrogen. It's been a trend line break there from April. You could argue exactly where it was, but it's sometime earlier this month. Break of the neckline resistance there, 37.5, could take us up to the top of that falling trend channel at basically 53 pence by the end of next month. Good bullish divergence line there as well. These tend to work as well as anything can. We're also backed up by the positive candles there. We had one there on the 13th of July, which was opening at the low, closing at the high. Sideways shuffle, and then the same, opening at the low, closing at the high today. I suppose that's actually a gap higher as well. So right on the 50-day moving average, and above that, looking for the low 50s as a minimum, one would suggest, for clean power hydrogen. On to Eve Sleep, which has been quite a journey for some. Here we've got a situation where it looks as though the shares are trying to break the downtrend that they've had since, since before October. Really, we've got a falling wedge here. Probably want to see a decent end of day close through the 1.2 pence area, but just the hint that the stock has found permanent support or lasting support there at 0.8, and above that there could be a flip higher to 1.5 as this turns into a V-shaped bull flag. So that would be the more optimistic way of looking at it, but everything here really depending on, for the big move, a break of 1.5, but above 0.8, that could be the destination. On to a stock which has become a bit of a favourite of mine in the recent past for obvious reasons. You can see from this chart, sharply rising 50-day moving average, sharply rising trend channel there from back in February. Top of the channel there heading for the low 60s, and above recent support, I suppose actually really above the 50-day moving average at 35 pence, and one's looking for 63, 64 pence as soon as the end of next month. We've had unfilled gap to the upside there back in May, and golden cross back in April. So it's basically got everything, or almost everything, apart from going to new highs in the near term. Stock which has delivered great fundamentals today, with a special dividend, which is unbelievable in the current stock market conditions. Presumably all those people trying to get a passport are boosting Photome International, but whatever the case is, whatever the fundamentals is, almost a bit of a Nanoco chart here with the unfilled gaps to the upside, especially the last one in June. Support coming in towards the 50-day moving average, but not needing to touch it. And the view now is that above the 86 pence level, which was the initial July resistance, we could head up to at least £1.10. It looks like it could be much more, but £1.10 the target over the next 2 to 4 weeks. If you're optimistic, you'd be looking towards the higher parallel that I've drawn there. So that would be £1.20 while we're above 86. So maybe that is one of the better looking situations, both combining both technicals and fundamentals at the moment. Finishing off with the situation at Tungsten West, and here we've had a bit of change. I think we're going to have change with the CEO, and also an update on the antics in Devon at the moment. But here on the charting basis, we've got bullish divergence, and that's been happening for the last couple of weeks. So the lower lows but higher RSI trace, breaking that line of resistance there from April. That was around 22 pence, and above that looking for at least the 50-day moving average at 27. Above that we've got probably the next level there up to 37, which was support on the way down back in April. So 27 and 37 while we hold above the 20 pence area on Tungsten West. That's it from me today. More updates tomorrow.